So, four important topics to discuss today. One is, are bond yields a threat to the US economy? Second, we have important central bank meetings coming up, so I'd like to jump into that. Three, we have some important shifting global political trends, specifically in Latin America, that are important. And then finally, the discussion of, does the US have what it takes to lead? And I'm going to be drawing upon evidence from Iran. Um, Now, we've been spending a lot of time, obviously, on Iran, some time on concerns about a stock market bubble, but there are other important topics that investors are very focused on, and I want to lead with that, which are US government bond yields, and are they a threat to the US economy? Now, this section is based on a conversation I had yesterday with a big executive at one of the major hedge funds in the United States. And I am going to draw upon this conversation and make it in a way that's, so these conversations, obviously, with finance professionals can get very technical, very sophisticated. So I am sort of going to translate this discussion to you, and hopefully it's a very digestible format. So I hope everyone can follow the thinking here. So again, this is based on a discussion I had yesterday with a big hedge fund executive. And the question that he raised is, should we be really concerned that bond yields now have reached a point where they're going to meaningfully disrupt the US economy? And might bond yields even go higher from here? And if so, that could mean not only a downturn for the US economy, because higher bond yields causes slower economic growth. It would mean that the Fed needs to why are bond yields rising? Well, mostly because of rising inflation, and that would mean the Fed would need to actually begin to raise interest rates, which would exacerbate an economic downturn and turmoil in the stock market. So let's dig into this concern. Now, right now, the 10-year bond yield, which is the benchmark bond yield for the US economy, not only for the US economy, but actually for the entire world, it is trading right now, the last I looked, about 4.44%. It had hit a high a couple weeks back of about 4.6%. So it's already a bit off the highs. We talked a little bit about government bond yields last Friday, and at that time, the 10-year government bond yield was at 4.5%. So it's fallen back by about 6 basis points from where it was last Friday. The 30-year bond yield, which is also very important, it hit a high of 5.2% a couple weeks back. And if you looked at any of the financial press, the Wall Street Journal, Bloomberg, Barron's, everybody was talking about the 30-year bond yield reaching 5.2%, which is the highest it had been since 2008. So that was getting a lot of attention. It's since fallen back below 5%. Again, as of an hour or so ago, it was down to 4.96%. So not as
Your chin is being
concerning.
cut off.
Excuse me?
Your chin is cut off.
Okay. So
Everything
not
looks
as
normal to me.
not as concerning. Can everyone hear me okay?
Yeah, everything's normal. I'm not sure about the other person, but you look
Okay.
normal. I was just hyping
Okay.
up.
Thank you. Um, so not as concerning as it had been, a couple weeks ago, the 30-year bond yield, but um, still high. Now, let's understand the reason why government bond yields, US government bond yields, have increased so much. And there's a lot of confusion about this, even among the professional finance industry, hedge fund managers, asset managers, many people say, you know what, it's really not about oil prices. It's really more due to a concern about rising government deficits. And many of you probably saw in the headlines the US debt to GDP ratio now actually crossed 100%. So our government debt stock is slightly over 100% of our GDP. Last year it had been slightly below 100%. So could it be this concern about rising fiscal deficits, rising debt to GDP ratios? Is this what's driving government bond yields? Just the concern that our government finances are on a very unsustainable trajectory. And for that reason, investors don't want to hold government bonds anymore. And they are requiring higher and higher bond yields to be enticed to draw them back into buying government bonds. Well, if you look at the evidence, when did we see the 10-year government bond yield and the 30-year government bond yield begin to climb? Well, just before the war broke out, that is, the week before February 28th, we saw the 10-year government bond yield trading in the low fours, 404, 405, that is 4.04%, 4.05%, 4.06%. And then February 28th, the war erupts, and the following Monday, we start to see bond yields start to rise aggressively. And there is a one-for-one correlation with the outbreak of the war, higher oil prices, therefore more concerns about inflation, and therefore higher government bond yields. So there really is no doubt that the spike in government bond yields is due entirely to the war and to higher oil prices. And, I think those who argue otherwise just aren't looking at this one-to-one correlation between the outbreak of the war, higher oil prices, and higher bond yields. So first things first, this is driven by war and oil. It is not due to concerns about our fiscal deficits and our rising government debt. Okay, this is a concern that is real, right? We shouldn't take our fiscal problems lightly, but it is not what is driving the rise in government bond yields. So now, in order to analyze whether we should really be concerned about these rising government bond yields, we should dig into the question, how inflationary is oil? Are these higher oil prices now that went from, let's say, on average $70 a barrel to now $100 a barrel, or a little lower, so about a $30 rise in oil prices, and obviously that filters through to higher gasoline prices when you fill up the car. Is this going to have a sustained inflationary impact? And my conclusion here is the answer to that question is no. Just like the tariff impact that we had, last year was largely a one-off, the increase in oil prices is also largely a one-off. We had this increase in oil prices, increase in gasoline prices. We're going to see those prices pass through to other goods and services. And then as long as oil prices stop rising, the inflationary impact of those higher oil prices will end. So in all likelihood, similar to the tariffs, it is a one-off. The timing is difficult, right? It's highly unfortunate because we were just getting over that one-off impact of the inflationary effects of tariffs, and bang, we get hit with another inflationary impulse, which is oil. So back-to-back inflation shocks. but and just as we would have seen just as we were seeing the inflationary impact of tariffs start to dissipate, we never got that dissipation, right? We never got that diminishment in inflationary effects, because then we get hit with the oil price shock. Now, it's also important to note, and I mentioned this last week, that our economy is far less dependent on oil and gasoline than it's ever been before. And if we were to compare it to several decades ago, our economy is actually 70% less reliant on oil and gasoline than it used to be several decades back. And a lot of analysts, economists are forgetting this important fact. Our economy has just become far more efficient. Our use of oil and gasoline is greatly diminished, and our reliance on alternatives has really grown significantly. And we talked about, again, last week, the growing usage of electric cars, our more efficient usage of heating and air conditioning. And this goes throughout, big companies are using much less oil than ever before. So as a consequence of this, higher oil prices will also be less inflationary than they were in previous years. And when economists try to model the impact of higher oil and gasoline on inflation, they're probably not updating their models to what's going on currently. Their models are probably largely outdated, using data from 10 and 15 and 20 years ago to make their inflationary forecasts going forward. Okay, so that's the first argument, that oil is probably a lot less inflationary than we think. Second argument on oil. Oil analysts have dramatically underappreciated what's called the supply response to higher oil prices. When the prices of certain goods go up, and companies can make more money by producing more of that good, they produce more of that good. So let's say all of a sudden we saw the price of haircuts go up, right? The price of haircuts go up by 30%. Massive increase in the price of haircuts. You would see within a few months a pretty dramatic increase in the supply of barbers, right? Why should I, work as a, as a salesperson in a mall if I can get a better salary cutting hair, right? This is just a classic response in the economy. When the price of a good goes up meaningfully, the supply of that good increases meaningfully. But oil analysts tend to believe that it's very difficult to increase the supply of oil, to build new pipelines, to dig new oil wells, right? It's a very, very slow process, and therefore you can get a very meaningful increase in the price of oil, and you will not see any reaction in supply, any response in supply. But the truth is, and the proof is in the pudding here, we have not seen oil prices go up very much. And actually, the peak in oil prices was when? It was actually the day after the war started. And since that time, oil prices have largely been in a declining trend. And why is that? Well, I suspect it's because we are seeing a supply response. We're seeing the output of oil increase more than any analyst envisioned. Now, do I have tangible proof? Well, I don't necessarily have tangible proof, but we can look at a few things that analysts, oil analysts, look at and poke holes and find flaws in their analysis. So, number one, oil analysts, Wall Street oil analysts, tend to have what I call an OPEC anchoring problem. What is an OPEC anchoring problem? Because OPEC has, over the years, been the most dominant supplier of oil in the United States. Okay, OPEC are largely made up of Arab countries, but it also includes Venezuela and Russia. But they're Arab oil producers largely, and they make up a substantial share of the world's oil production. And oil analysts pretty much only focus on OPEC. And they've concluded that OPEC really cannot produce any more oil than they were producing before the war. But that is only part of the story. And oil analysts have been missing for several years that there are other important oil producers that are supplying the market. So I'll just name one. I'm gonna start with one. I'm gonna name several. Guyana. Guyana, a couple of years ago, was producing pretty much zero oil. But in the last couple of years, they've went from producing zero oil to nearly 1 million barrels per day of oil. That's a significant increase in a pretty short time span. And they continue to ratchet up their oil production. Argentina is another example. They are rapidly scaling up their oil production. Another example is Brazil. Brazil has deep water oil pipelines, and they have been ramping up their oil production. And these are just a few examples of supply that oil analysts never even considered. Now we have the United Arab Emirates, right, which just broke away from OPEC, and they are going to be ramping up oil production much more aggressively than anyone thought possible. In the United States, oil analysts have chronically underestimated shale productivity, right? Shale productivity is the ability to extract oil out of rock. And oil analysts in the United States never imagined, that we would be able to produce the amount of oil out of rock that we are now extracting, and that continues to go on at a pretty shockingly rapid pace. So this increased oil supply, combined with the United States increased efficient use of oil, means that not only are we burning less oil than we used to because we're much more efficient, but we're also supplying a lot more oil than we used to. And as a consequence, oil prices have ranged at about $100 a barrel plus or minus a little bit. Right now we're a little bit below oil, way below what oil analysts expected. They expected oil prices at this point to be at least $150 a barrel. So we're not even close to that. And they thought we were going to hit 150 and be well on the way towards 200 a barrel. So that hasn't even come close to playing out. So again, the proof is in the pudding. It's not. People like to blame or conclude that the reason why oil prices haven't gone higher, it's all about market psychology, right? Trump has managed to convince the world that that we're going to have peace with Iran any day, and therefore oil supply is going to increase. But market psychology cannot possibly be the explanation. And why do I say that? Why do I say market psychology can't possibly be the explanation for these lower than expected oil prices? Because markets actually work in the exact opposite way. Generally speaking, when there's a potential crisis in a market, investors attack and they wait for real evidence before ending their attack. So, for example, if there's a concern that we are experiencing a banking crisis in the United States, investors start to sell stock immediately. And they don't stop selling stock until the Fed steps in and saves the day and prints a lot of money and saves the banks. Only then will investors breathe a sigh of relief, stop selling their stocks, and start buying their stocks. Well, the same thing works in oil markets, right? If investors are absolutely convinced that we are going to have an oil crisis, they start an oil crisis means a shortage of oil. So in this case, they would buy oil like crazy and send oil prices up to the moon until it's clear that there isn't an oil crisis. But investors only did that during the first week of this war. But once the first week of this war ended, was past us, oil prices started to decline. And the only possible explanation for that is not Trump promising that he's going to put an end to this war, right? Investors don't respond like that. They need to see proof. But the reason they didn't need to see proof that the war was coming to an end and the Strait of Hormuz was going to open up is because there's only one logical reason. There is actually ample supply of oil. And that's why investors haven't gone on this buying spree. It must be because they look around and see there is sufficient supply of oil, so they don't need to go into a panic and start, buying oil hand over fist. Okay. So these first 2 points we're trying to demonstrate, going back to, my initial idea, why it is that bond yields aren't going to be such a big concern. Rising bond yields they're not going to keep rising, and we're not going to go into a crisis. The first reason I stated was bond yields are higher because of inflation concerns due to oil. And I made the case that oil prices aren't all that inflationary. Okay. And then my second point was that true, oil prices aren't that inflationary, but furthermore, we don't really have an oil shortage. And therefore, oil prices really aren't going to go up that much higher. And in all likelihood, even if the war goes on, oil prices will remain pretty stable because we have an ample supply of oil in the world. Both of these points I'm making go against the conventional wisdom in a big way. Okay. And one of the reasons why investors have been so bearish on the stock market, but the stock market has continued to do extremely well, is because of the 2 points I've just made, right? And the conventional wisdom has been completely wrong. Okay. To continue, again, we're continuing on the argument why it is that we shouldn't be so concerned about rising bond yields. Well, an additional factor that could could push bond yields even higher, is if the Fed has to raise rates. And right now, the bond market is pricing in a rate hike or two for 2027. The market is pricing in at least one rate hike for 2027, and it's sort of halfway towards pricing in a second rate hike in 2027. And I argue that the bond market is wrong. The bond market is just like the market has been wrong on the first 2 points I made. The market is wrong about this third point. The Fed is not going to need to raise interest rates next year. And the reason for that is the following. Okay. And I want to compare the current inflationary episode, because we are getting some inflation because of oil prices, to the inflationary episode that we had between 2021 and 2023. Okay. This is a very important comparison. And people who are super worried about inflation are missing these points, and these are very important points. Back in 2021, if you recall, we were coming off of COVID, and to deal with the COVID shock, to deal with the recessionary forces that were playing out in the US economy, the US government, first the Trump administration and then the Biden administration, increased government spending massively. Okay, and they really overdid it. Both Trump and Biden overdid it. They spent way too much money trying to pull. It was right to spend some money to try to prevent a recession or to pull the economy out of a recession. We actually did have a recession in 2020. They overdid the spending, and that massive government spending caused was one of the big contributors to this big inflation that we had. Now, in comparison, today, we do not have this massive increase in government spending. It's just not happening, right? We do have a big fiscal deficit, but it's not because the government is increasing government spending, right? Government spending is high, but it's not going up. To cause inflation, you need an increase in government spending, not stable. Stable government spending from an already high point doesn't cause inflation to go higher. You need a significant increase in spending, and we're not getting that. Okay, so we don't have an inflationary impulse coming from government spending. That's a major difference from 2021 to 2023. Secondly, right? So this is a reason why the Fed does not have to raise interest rates. There's no big increase in government spending. Secondly, between 2021, coming into the COVID crisis, following the COVID crisis, okay, the Fed cut interest rates to zero, and they were printing massive amounts of money. So not only did you have a big increase in government spending, you had the central bank printing a lot of money for the same reason the government was increasing spending, to get this economy out of recession. And they printed and they printed, and just like we spent too much money, we print way too much money, and that was another important force behind the inflation we had. What about today? Today, the Fed is not printing any money. In fact, they're keeping interest rates somewhat high, much higher than the zero interest rates that we had in 2022 and 2023. Sorry, I'm getting my dates confused. We had zero interest rates basically in 2020 and 2021, a lot of money printing, and that led to this massive inflation. Today, we don't have zero interest rates. We have fairly high interest rates and no money printing. So that's another reason why we're not going to have an inflationary impulse. Third, in 21 and 22 and 23, we were coming off this huge supply shock. That is, because of COVID, there was a massive shortage of goods in the economy, right? You couldn't find lumber to build, to do home construction. You couldn't find running sneakers. You couldn't find clothes. Why? Because COVID shut down the economy for a full year. And it took a long time for production to ramp back up again and produce goods again. So we had a massive shortage in supply. We had huge demand because of all this money printing and government spending. And when you have a huge increase in demand and limited supply, what happens? Inflation. So this is a third reason why we had an inflation wave in those years. Do we have a supply shock today? Do we have shortages of goods today? Not at all. No shortages. So that's another reason why the Fed doesn't need to be concerned about ongoing inflationary pressures, and it won't need to raise rates next year. And the final reason, and this might be the most important reason of all, what tends to be the biggest driver of inflation? Labor, wages. Okay. When there are wage pressures, when workers are asking for higher and higher wages, the biggest cost to companies in the US economy, the biggest cost are wages. So when wages are going up, companies' margins decline. And to keep those margins healthy, they increase the cost of the products that they sell. And that causes inflation. So in the aftermath of COVID, what happened? We had the government sending out checks to people that had lost their jobs, right? During COVID, people had lost their jobs. The government wanted to make sure that people still had plenty of money to spend. So they sent out very, very healthy, comfortable checks to people to compensate them for their unemployment, right? And these were large, much larger than usual unemployment insurance. And those checks were extended well beyond COVID. And as the economy had gotten back and people and there were, the economy was growing again, and in fact it was growing very strongly, workers did not have incentive to get off the couch and work again. Why? Because they were still receiving large checks from the government, and they were getting paid more for sitting at home than they would have for returning to work. And this led to a massive shortage of workers. And this massive shortage of workers, to get people off their couch and back into the workforce, companies had to offer big pay packages to people. So wages skyrocketed. They skyrocketed. And that was another powerful inflationary impulse. And as a result of these four factors that I just mentioned, big government spending, zero interest rates and money printing by the Fed, shortages of goods, right? The supply shock, and very high wages, we had a big inflationary wave. And the Fed from 2022 through 2023 had to go on this big increase, this big rate hiking cycle. We don't have any of these factors today. We do not have a shortage of workers today. No one is getting big pay packages today. If anything, you hear people complaining that my wages are too low, right? My wages aren't keeping pace with inflation, right? The affordability crisis. The affordability crisis because inflation is actually higher than wages. Wages are actually not an inflationary impulse at all. They're probably, if anything, pulling inflation down. So this above analysis suggests that bond yields are not going to go higher. If anything, I would argue, the risk is that they will go lower. And if I were, we're not going to buy bonds in this program, but if I were sitting at a hedge fund and I wanted to put on a good trade right now, I would buy, I would make a bet that bond yields, and I would have made this bet 2 weeks ago, right? I would have made this bet 2 weeks ago, but I'd still be holding on to it, that bond yields are going to go lower from here, not higher. And the market is pricing in rate hikes for next year. That's a mispricing. The Fed is not going to raise interest rates next year. Okay, so bottom line then, the government bond market, bond yields are not a risk to the economy. They're not a risk to the stock market. In fact, we're going to see lower bond yields, and that is going to help boost the economy, and it's going to help boost the stock market going forward. Okay, now let's move into the second topic, which is we have important central bank meetings coming up. Next week, we have the European Central Bank, the ECB. It meets next Thursday, June 11th. And the consensus among European economists and among people who play Europe, who bet on the European stock market and the European bond market, the overwhelming consensus is that the Central Bank of Europe is going to raise interest rates by 25 basis points, by a quarter of a percent. So they'll raise rates from 2% where they are today to 2.25%. Now, that is largely baked into the market, right? That's pretty much fully priced in. So the real question is less what they're going to do in terms of interest rates next week, but more what are they going to signal about the future? Now, in Europe, headline inflation is running at 3.2%. And core inflation, remember, core inflation strips out oil and food prices. Core inflation is running at 2.5%. So that's above their 2% inflation target. And it's been running above the 2% inflation target for quite a while, which is why nearly all economists and European investors believe that they're going to raise interest rates. But when it comes to signaling what they're going to do in the future, are they going to continue to raise interest rates? We have to take into account how the economy is doing. And the economy in Europe is very weak. It's growing at about 1% per year. And the risk to that growth rate is to the downside. That is, the risk going forward is that they will slow below 1%, and that gets dangerously close to zero growth or even a recession. So I suspect that what's going to happen is they are going to signal that in all likelihood, they're just going to take a wait and see approach after this one hike. They needed to hike, but now they want to see what the incoming data looks like. Now, this is important for all of us, but especially those of you who are in our currency program, because I've been wanting to, we have been shorting the euro. We're looking to short the euro again. And this is a key meeting, because if I'm wrong about this, and they signal that they're going to continue to raise interest rates going forward, then that would push the euro higher, because higher interest rates causes a currency to strengthen. So the market already knows they're going to hike interest rates next week, but they're less certain about the future. If they signal no more rate cuts for a while, the euro will probably drop against the dollar. But if they signal they're going to keep raising rates, the euro would rise against the dollar. And it all hinges on their view of how strong or weak do they think the economy is in Europe. And again, the economy looks pretty weak to me. I suspect they also think it looks pretty weak. Then that will bring us to the following week. We get the Fed. So 6 days later, so ECB is June 11th, June 17th, that's 6 days later, the following Thursday, the Fed meets. And this will be Kevin Warsh's first meeting as Fed chair. So this is a really very, very critical meeting because it's his first meeting. And you can be sure, because of the inflationary pressures that we've been discussing, there are 12 voting members at the Fed. We know, at least I think, 11 of those members will want to signal to the market that they are not likely to cut interest rates anytime soon, which means they're likely to, 11 members want to remove the easing bias, because right now in the official Fed statement, it indicates that while they're not likely to do anything anytime soon with interest rates, when they do ultimately make a decision to move interest rates, that move is likely to be to reduce interest rates. That's called an easing bias. I suspect 11 of the voting members are going to want to remove that easing bias because inflation has moved up, right? Right now, inflation, again, they have a 2% inflation target. inflation using the PCE index, which is what the Fed uses. Headline inflation is running at 3.8%, so that's well above the 2% target. Core inflation, which leaves out food and energy, is running at 3.3%, also well above the 2% target. Remember, we talked about the ECB, they're going to hike rates. They're going to hike rates, and their inflation readings are well below what ours are, right? So how in the world can we have an easing bias? We shouldn't. Now, the one question mark here, I said 11 of the voting members are going to want the easing bias removed. Oh, the one question mark is Kevin Warsh. What does he want to do? And as we've said previously, the Fed is a democracy, right? One person, one vote. Kevin Warsh does not have a greater weighting on that voting scale than anyone else. So even if he wants to maintain the easing bias, if it's 11 against 1, or even if it's 7 against 5, he doesn't get the winning vote. So in all likelihood, this easing bias is going to be removed. Now, if the easing bias gets removed, again, going back to our currency discussion, if we get this combination where the ECB signals they're not going to hike anytime soon again, they're going to hike this once, okay, and that hike is already priced in, and if the Fed removes its easing bias, to me that signals dollar strength, okay? Now, if I'm wrong about one of those two, if the easing bias remains in there, okay, which I don't think it will, but if it were to remain in there, the dollar would probably weaken against the euro and weaken against most currencies in the world. So it's a big meeting, and mostly it's important for the currency market. So for those of you in the currency program, this is something very important to be focused on in the next couple weeks. Okay, now let's move on to the third topic, which is shifting global political trends. And the topic really here is Latin America. There was a presidential election this past Sunday, and it took place in Colombia, the country Colombia, which neighbors Venezuela. And the current president, his name is Gustavo Petro. He is not allowed to run again because in Colombia you're only allowed to hold one term. You can be president for one term of 4 years. His term is over. So there was an election. Now in Colombia, if no candidate gains over 50% of the vote, the election then goes to a second round. So Sunday, no candidate got over 50%, so there's going to be a second round to be held on June 21st. Now, the candidate, first of all, the current president in Colombia, Gustavo Petro, is a radical left-winger. He is an outright socialist or communist. He is extremely anti-American. He is very pro-China, pro-Iran, pro-Hamas. He's as bad as you get. And if he could have, he would have turned Colombia into a dictatorship. But fortunately for Colombia, they have very strong political institutions, so that just wasn't in the cards, right? He had no choice but to go into elections. The political institutions are so strong that he had no chance of committing electoral fraud for his preferred candidate. So what happened in the first round? Well, there were 3 candidates. One of the candidates, his name is Abelardo de la Espriella, okay? He is a extreme conservative candidate. He is wildly pro-American. He's actually wildly pro-Israel, which in this world today is highly unusual. He's free market. He models himself after after the president of Argentina, Javier Milei. And in the polling, it looked like he wasn't going to win. If you looked at the polls, it looked like he wasn't going to win. The likely victor was someone who was a replica of the current president of Colombia. And his name was Ivan Cepeda. As it turned out, the right wing, the conservative, won. Okay, he won by about 3 percentage points. Okay. The third candidate was a center right wing candidate. They only got about 7% of the vote. So now we go to a runoff. It's going to be against a very conservative candidate, okay, who's very pro-US, very pro-Israel, against an extreme left-wing candidate who is a communist. He's very pro-China. He's very pro-Iran. He's very pro-Russia. This is the election. And it's going to be fairly close. But in all likelihood, the conservative is going to win because he won the first round, and the third place candidate is center right, and probably most of his votes, the 7% that he won, the lion's share of those votes are likely to go to the conservative. Now, why does this matter? Why does this matter? It matters for two reasons. Number one, the geopolitical map of Latin America is moving, or appears to be moving sharply in a more conservative direction toward the United States and towards Israel. Now, that's a strange thing to say, that Latin America is moving towards Israel, but it really is. These conservative candidates make it a point in their campaigns to make it crystal clear that they're pro-Israel. It is a key part of their campaign. And that is absolutely bizarre, right? In Latin America, when has Latin America ever cared about this tiny little country in the Middle East called Israel? It's a recent phenomena that it has become a part of every candidate's campaign, whether you're from the left or you're from the right. Everybody campaigns on Israel. And it was a key part of this guy's campaign. It's fascinating. So the geopolitical map in Latin America is shifting. In Argentina, I mentioned Javier Milei. He is clearly pro-America, pro-Israel. In Paraguay, Paraguay has already been one of America's and Israel's strongest allies in Latin America. Ecuador, which used to be a wildly left-wing country, is now firmly in the pro-America, pro-Israel camp. Uruguay is in the pro-America, pro-Israel camp. Chile, months ago, they elected a conservative who's pro-America, pro-Israel. So you're getting this happening. It's like a domino effect. One left-leaning country after another, not left-leaning like radical left, is switching and becoming pro-free market, pro-America, pro-Israel. And as I said, Colombia, it very well may be the next one. And then, of course, you have Venezuela. If Venezuela were to hold an election today, and if Trump were smart, he'd make an election date fairly soon, because that country also would turn in a second. You'd get Maria Corina Machado winning that election. She's very pro-America, very pro-Israel. This would be another critical, a pro-Cuba, pro-China, pro-Iran country. They obviously switching sides. Trump is talking about toppling the government in Cuba, so there's another key one. We have a very important election coming up towards the end of the year in Brazil. Brazil is South Latin America's largest country by far. And this election, the first round, takes place October 4th. It's like Colombia. There'll likely be two rounds if no candidate wins above 50%. You have the current president, Lula, who is this radical lefty running against Flavio Bolsonaro, who is also, again, pro-America, pro-Israel. And again, it's a key feature of his campaign. And Lula, it's a key feature of his presidency that he's anti-Israel, pro-Hamas. So these are very interesting developments and absolutely crucial. And again, it's a shift away from China, a shift away from Iran, a shift away from socialism, a shift away from radical Islam. The pendulum really does appear to be swinging. Now, I mentioned it's important for two reasons. Number one is just, face value, geopolitics. This is the backyard of the United States seems to be shifting in a very positive direction. So that's important in and of itself. But secondly, this demonstrates that globally in the world, the pendulum swings, right? We go through periods in the world where you get moderate or conservative governments, and they actually do a pretty reasonable job. Okay, I'm not going to go through the history of moderate and conservative governments in Latin America and globally, getting the economics pretty good, doing a fairly good job. But nothing is ever perfect, right? Nothing is ever perfect. Economic performance is never perfect. There's always going to be plenty of complaints, just like there is in the United States. Inflation is too high, wages are too low, right? Everyone is always unhappy, the affordability crisis. And because nothing is perfect and there's always problems and flaws, populists are able to make hay with it. They're able to create enemies and say we need to bring down the system and we need to go into a radical direction to save our country. And this is what always happens throughout the world, right? You get reasonable economic performance by moderate or conservative presidents, but they don't deliver perfection, right? There's always flaws in an economy, always flaws in a political system. And then you get a radical from the left wing, and they take over, they win the election because they make these populist appeals to the electorate, and they win, and they proceed to absolutely decimate the country. They destroy the economy. There's massive corruption. And they bring the country to its knees. And this can go on for year after year. It can go on for decades until ultimately the country wakes up. And like in the case of Argentina, then they elect a Javier Milei who sees the world properly. And he wins. And he ultimately is able to clean out the garbage and start to put the economy on a better path, right? It's a pendulum. But when you go take a wrong direction on that pendulum, the consequences are devastating. But it's never permanent, right? It's never permanent. Latin America is proving that it's not permanent. And ultimately, when the people feel the pain enough, the pendulum swings back the other way. So this could happen in the United States as well, right? Because we have problems in the country, right? And we do have problems. The next election in 2028, we could take a radical turn, a radical, ugly turn. And it could be, someone on the right, like a Tucker Carlson type, right? Or it could be a radical on the left, someone like AOC, right? She's doing pretty well in the polls. Or you name the Democrat. They're all horrendous, honestly. And our country could go down a very radical path. And that would do tremendous damage to the country. But the point here is it's a pendulum. And once people feel enough pain, the pendulum swings back. So it's important for two reasons. Number one, there are important positive trends going on in our backyard. And number two, even if we do go in a bad direction, right, it would be ugly, it would be nasty, but in all likelihood, the pendulum would ultimately probably swing back in a better direction. Now, I want to move on to the final topic, and I'm sorry we're going to go over it today, but this is an important topic. Does the US have what it takes to lead? And I'm going to draw on the case of our conflict with Iran right now. Now, given what we just discussed about the global shifts, particularly in Latin America, it is absolutely essential that we need to rise to the occasion, right? Because the world, at least Latin America, is inspired, and they want to be closer to the United States. So we need to be leaders. This is not the time for weakness. It's a time for strength. It's a time for leadership. We are at a pivotal moment. So the question is, are we going to rise to the occasion? To begin to delve into this topic, I want to read to you a little clip from a report that was written produced by Citadel. Citadel is one of the top hedge funds in the United States. And they write the following, and this is regarding Iran, right? Regarding Iran, they say we are more constructive on the markets than the consensus because we believe the prospects for a U.S.-Iran deal to reopen the Strait of Hormuz in a timely manner, is likely. We're optimistic. We think that the Strait of Hormuz is going to be open fairly soon because we think a deal between the U.S. and Iran is coming. Okay? And they give two reasons. And because of time, I'm not going to go through the two reasons they give, but they're optimistic. They think we are heading full speed towards negotiations. They're bullish on the stock market because of it. And this is coming from one of the top hedge funds, not only in the United States, but the world. Okay, that sounds optimistic. But I'm going to explain to you why that's not a good thing. Okay? So last week, on Friday, Thursday and Friday, mostly on Friday, we were told, even by Trump himself, that we're about to sign a deal, right? We're about to sign a deal. Trump was just going to go in to a meeting with his cabinet. In all likelihood, he was going to go into that cabinet meeting and sign off on the deal. But then he didn't. And then over the weekend, we learned that Iran broke off negotiations. Okay? And yesterday, Trump is confronted with a question by a reporter. Iran broke off negotiations. And what was Trump's reply? Trump's reply is, good. It's better that we don't talk. It's better that we don't talk. Okay, so let's go back to Citadel tells us we're super optimistic there's going to be a deal. Then we learn that Iran broke off negotiations. And then Trump tells us, good, I don't care. I don't need a deal. It's better that we don't talk. Less than an hour later, Trump posts on Truth Social that he spoke to Netanyahu, and Netanyahu agreed that he will not send troops into Dahya. Dahya is a suburb of Lebanon. Dahya is a Hezbollah stronghold. It's really where their headquarters is. It's their most important stronghold. So Bibi agrees no Israeli troops into Dahya to destroy Hezbollah, and not only no troops, but Bibi agreed we won't even attack this Hezbollah stronghold. We won't attack it. And then in the same Truth Social post, Trump tells us, I spoke to Hezbollah. I had a great conversation, fantastic conversation with Hezbollah, and they won't attack Israel anymore. Okay? A few hours later, of course, the media hasn't reported this. A few hours later, guess what happens? Hezbollah attacks Israel again, sending many missiles into the north of Israel, trying to kill civilians. Okay, sticking with the same tweet, had a great conversation with Hezbollah, and he says we are negotiating with Iran. Iran says they're not negotiating. They broke it off. No, no, we are negotiating. And in fact, a deal is possible. It's possible this week, it's possible next week. Okay. How many times have we been told a deal is coming? We're on the brink, it's happening. It's become worse than a horrendous joke at this point. What in the world is going on here? Now, to make matters worse, there was a leak uh, overnight by Barak Ravid. Who's Barak Ravid? He is a journalist that writes for Axios. And Axios, through Barak Ravid, has been the voice for all the leaks coming out of the Trump administration. You know, 99% of the leaks that come out of the Trump administration are through Barak Ravid, who publishes them through Axios. And then once Axios publishes the leak, every single media outlet in the United States repeats the leak, and it becomes a fact. Okay? Not only the New York Times, but Fox, Sean Hannity, Jesse Waters, right? The most pro-Trump, they are repeating leaks given to Barak Ravid from Axios. So what's the leak? The leak is that Trump and Netanyahu had a long conversation yesterday, and Trump screamed at Netanyahu. He called Netanyahu effing crazy, and he blamed Israel for all the global hatred that Israel is experiencing. Now, let me be clear. Barak Ravid and Axios notoriously report conflict between Trump and Bibi, like every week. And so far, these so-called leaks have almost always, and I'm saying almost always because it's really always, but you don't want to say almost always. You don't want to say always, so I'll say almost always, have been inaccurate. In fact, it seems like the Trump administration has consistently used Barak Ravid to misdirect the world, to throw him off base. So the day before the 12-day war broke out last June, Barak Ravid published an article saying that Trump and Bibi had a terrible fight, and Trump screamed at Bibi, and there was no chance of a war because Trump was very angry at Bibi, and the next day the United States and Israel attacked Iran. The same thing happened the day before this war, February 28th. On February 27th, Barak Ravid, through Axios, published a report that Trump was beating up on Bibi. He was very angry with Bibi. Again, it was a head fake, a misdirect. And the war began on February 28th. So what in the world is going on here? And why is it that the media never learns, right? They keep repeating the nonsense of Barak Ravid. Okay, so I'm up. I kind of had a sleepless night last night, and I'm going through scenarios. What it could be? What could it be? What's going on here? And I come up with three possibilities of what Trump might be up to. And I'm going to walk you through my thought process. Possibility number one, the US and Iran are truly negotiating. They're really negotiating. And Iran keeps saying, no, we're not negotiating. But Iran is lying. Okay, so this is possibility number one. We really are negotiating. And Iran keeps saying, not anymore, we broke it off, but Iran is lying. So if this is the case, it could suggest that Trump really wants a deal. Trump really wants a deal. But Iran keeps lying. They keep saying we're not negotiating at all. Why would Iran be doing this? Because by telling the world that there's no negotiation and forcing Trump to announce to the world, no, no, we really are negotiating. Iran is proving to everybody that Iran doesn't want a deal. They could care less. But Trump is desperate. And Trump is desperately trying to hang on to the deal. Iran keeps saying we broke it off, and Trump is saying, no, 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 they're negotiating with us, I promise, and a deal is going to come every day. And by Iran proving to the world that Trump is desperate for a deal, they're toying with him. They're toying with him and dragging this out and dragging this out. And by dragging this out and dragging this out, they're forcing Trump to make concessions to them, right? Because he's the desperate one. He'll do anything for the deal. And they're going to force concessions on Trump. That's very possible. And it's also quite bad. And it's real U.S. weakness. And I never wanted to believe in taco, Trump always chickens out. But if this is the scenario, this is Trump chickening out. Okay, let's go to the second possibility. Second possibility is the U.S. and Iran really are negotiating. And again, like the first scenario, Iran is lying. Iran is lying. They are negotiating, but they're telling the world we're breaking it off, and that's a lie. But in this scenario, unlike the first one, Trump actually doesn't want a deal. He's pretending. He's just pretending. Iran is trying to humiliate Trump, showing that Trump is weak, and Trump is playing along. Why is he playing along? Because really, Trump just wants to keep negotiations going and going and going. Why? To keep oil prices low, because he knows the oil market will respond favorably to negotiations. If the market thinks that a deal is coming tomorrow, they won't push oil prices up. It'll keep the stock market up, right? Because if investors believe a deal is coming tomorrow, they won't sell their stocks. They'll keep buying stocks. So Trump gets the market to behave, right? But he actually doesn't want a deal. What he really wants is the markets to behave while maintaining maximum pressure through the naval blockade. And he continues to strangle the Iranian regime through the naval blockade. And this is a really very low-cost strategy because financial markets are well behaved, oil prices are reasonably well behaved, and Trump can keep doing this and doing this and doing this. You get past the midterm elections, and then Trump has an option. Now I can either maintain the blockade, or now that I'm past the midterms, I can restart the war. Okay? So that's the second scenario. Trump actually doesn't want a deal. He's playing games. He's just keeping the stock market from falling and oil prices from rising. And that's what this is all about, to get us perhaps all the way to midterms or for as long as possible. Okay, then there's the third scenario. And that's it. By the way, that's a good scenario, right? I mentioned the taco scenario. This is the good scenario. Scenario number 3. Perhaps Iran did stop negotiating, right? Negotiations are over. And it's Trump that's lying. He's telling the world, no, actually, we're negotiating, right? He's lying to the American public. He's lying to the world. No negotiations are going on. And it's for the same reason. He wants to keep oil prices low and the markets up and just maintain the blockade. Maintain the blockade until after elections, midterm elections, or perhaps sometime before elections, but he's just stringing this out by lying. So those are the 3 possibilities. 2 out of the 3 are reasonably good. 1 is very bad. Which one is it? I'm going to get to that later. Before I tell you which scenario I think is most likely of the three, obviously, I hope it's scenario number two or scenario number three and not scenario number one. But let's talk about this leak about that coming out of the White House to Barack Ravid, that they got Trump and Bibi got into this nasty, nasty fight. Trump called them effing crazy for attacking Hezbollah. Is this leak true or is it false? Well, if it's true, it tells us that Trump is desperate for a deal, right? And that's a big problem because it emboldens Iran. If it's false, why would someone from the White House leak this? Well, it could be someone from the White House leaking it because they really want to create division between Israel and the Trump administration, right? They want to create friction. So that's one possibility. Another possibility is that it's a misdirection, right? It's a head fake. And the head fake is meant to catch Iran off guard, right? And I said we saw this before. We saw it before Operation Midnight Hammer in June of last year. We saw it before the war starting on February 28th of this year. This could be another misdirection. And if that's the case, you would expect a military strike by the US and Israel to happen very soon. Okay? But that doesn't seem likely, right? The military strike would have probably come today, if not tonight or tomorrow. There are zero indications that we're about to get a military strike. And by the way, I tend to know if a military strike is coming because my son tells me, who is in the reserves in the Israeli army, and every time something has been coming, he's let me know, Dad, something's coming. I'm not hearing that. So nothing is probably coming. Okay. Now, if it's not misdirection and if it's not someone trying to create a a uh, a real division between the U.S. and Israel, what else could it be? Maybe Trump wanted this leak. And why might he want this leak? Number one, to show parts of his MAGA base. You know this rumor that you keep hearing that Bibi controls me, that Bibi tells me what to do? No, no, no. That's not what's going on. I tell Bibi what's going on. I tell Bibi what to do. I'm the chief. I'm running the show. So that's one possibility. He's playing to certain parts of his base. And the leak was intentional for that reason. If that's true, it's a pretty sick game because it emboldens Iran, right? Emboldens Iran. It makes Iran believe that there's a real division between these two allies. And division between two allies is good for the Iranian regime. So let's get to what do I think is actually happening here. Well, first, let's be clear. These negotiations are not going to get a deal done. Trump is dealing with Iran. And Iran is never, ever, ever going to surrender its nuclear goals. Never. Nuclear weapons is essential to this regime's identity. It's essential to its mission, and it will never surrender. Surrendering its nuclear ambitions is the equivalent of death. Their mission is over, right? It's done. They're not going to surrender their mission. It's who they are. So if Trump means it when he says no nukes for Iran, it should mean that a deal is impossible and war is inevitable. Now, we have a huge problem in America. when it comes to our national defense, our national security, when it comes to fighting wars. And here's the problem. The United States has become irrationally afraid of war. And I say irrationally afraid of war because to be strong in the world, you need to be willing to fight a war if necessary. But in the United States, long wars have become taboo. Absolutely unacceptable, absolutely intolerable. We cannot stomach a long war. A long war must be avoided at all costs. That's what we've turned into, and that's a problem. If you're going to be the superpower, you cannot be petrified of a long war. We've also become petrified of losing soldiers. That too has become absolutely taboo. And it's tragic to lose soldiers, absolutely tragic. But again, if you are going to be the world superpower, there are costs involved with that. And as tragic as it is, one of the costs is losing soldiers in war. And if you're absolutely petrified and it becomes completely intolerable to lose a soldier, you cannot be a superpower. And our enemies know this. They know that long wars have become intolerable, that losing soldiers has become intolerable. And when they know it, when they smell it, it makes us weak. They understand we have a low pain tolerance. And to make more of a mockery out of this, I just talked about long wars and losing soldiers. But it's gotten to the point that we cannot even handle somewhat higher oil prices. That too has become absolutely intolerable. That's our breaking point, high oil prices. Imagine that. I just saw, just to make an interesting analogy, my wife and I are watching a show on Netflix, and it's on Rafael Nadal, the great tennis player. And there's a scene where Nadal says, what's his strength? He's talking about what his strength as a tennis player is. And he says that this was so profound and so relevant to this topic. He says, I know I can outsuffer my opponents. I can take more pain than they can. That's profound. He can outlast anyone in a match because he's willing to suffer point after point after point, just a little bit more suffering than his opponent. Well, the US has become the opposite. We've become totally intolerant of sacrifice, even to the point where high oil prices become intolerable. And that's a bad place to be. And it gives our enemies an enormous advantage. And if this is what Trump is afraid of, Taco is real. And it does raise the question, will Trump back off no nukes for Iran? Because Iran absolutely thinks so. They absolutely think so. You can see it from the way they're negotiating. You can see it from their behavior. So that's where we are right now. That's where we are right now. Now, I need to conclude. I can't conclude without telling you where I think we are right now. Is Trump susceptible to chickening out? Is Trump so desperate for a deal that he's willing to do something incredibly damaging? I hope not. But I think we're at a moment right now where it could go either way. And here's my argument. Here's my educated guess. Trump may be willing to do something stupid. And here are a few examples. Number one, Trump forced Israel to cut a deal with Hamas and leave Hamas in power, right? They now have 40% of Gaza. Israel has control of 60%. That 40% Hamas controls. Trump said the deal must be that the part of Gaza that Hamas now controls, Hamas must leave power and demilitarize. We have not moved an inch towards that. In fact, that portion of Gaza is becoming more and more and more militarized as every week goes by. So Trump was willing to do that. He was willing to walk away and absolutely close his eyes to Hamas becoming more militarized, right? So that's evidence number one that Trump has shown willingness to make bad deals. Second piece of evidence. After 38 days of war, on April 8th, Trump announced a ceasefire. And what did he say we got in return for ceasefire? He said that Iran promised to open up the Strait of Hormuz and let international ships pass through. Within 5 minutes, I posted on our Telegram chat that there was no deal, that international ships would not be passing through. I knew that 5 minutes after. Iran has kept the Strait of Hormuz closed. They never lived up to the ceasefire deal, and Trump has been okay with it. Another example of Trump being willing to make a horrendously bad deal and just sort of pretend that everything's okay. Now, those are two recent examples of Trump making atrocious deals. It's bad for US credibility. It's bad for Israel, our closest ally in the world. And Trump accepted those arrangements. Now, why might this be different? I want to end on a glimmer of hope. Because this is the threat of a nuclear Iran. Okay? Hamas doesn't present an existential threat at this point to anybody, only to its own people, only to the people living in Gaza. The Strait of Hormuz, it's unfortunate, but it's not a life or death situation. And Trump still has the ability to open it back up. But Iran going nuclear, that's existential, right? That would threaten Israel's very existence. It would threaten the existence of every country in the Middle East. Ultimately, it could threaten Europe. It could threaten the United States. So this may be a red line that Trump is not willing to allow be crossed, where he has allowed other red lines to be crossed. So this might be different. So let's hope it is. I want to end on an optimistic note there, but a lot is riding on the line. So let's hope that Trump is just playing games. He is stringing this along, strangling the noose through the naval blockade, and hopefully, ultimately, the Iranian regime will crumble one way or the other. But, it is a hard call right now to know what the truth is. But hopefully I've given you a good framework to think about our predicament. All right, guys, it's 1:26. Maybe I'll take one question to see if there's one question.